analyst, batting cleanup today, so he's going to mop it all up for us. Oliver, what say you?
Well, certainly a little different picture than how we started the week. Last Friday, we had that nice, friendly USDA report, and we saw some follow-through to start the week. But I think what you're seeing here over the last 24 hours is producers taking advantage of those higher prices. And then you've also got some headlines coming in with Argentina maybe getting some more beneficial rains in some of their dry areas, which had put a little premium back into the market as well. This morning's weekly export sales for corn, that was largely in line with expectations, so kind of ho-hum there. What was encouraging was another flash sale for corn, 135,000 metric tons of corn to Taiwan. So I think there's still a decent fundamental backdrop for corn. Looking at the technical perspective, 470 is going to be a big line in the sand going into the last trading day of the week. That would be near unchanged for the week, and we're basically where we finished last week. A break and close below there, and potentially you start to see anybody that bought this week maybe exit those positions and take us back down to that break out point from last week's USDA report, and that comes in closer to 460.
We've had some folks on talking about technicals, and we've got one in D's corn, new crop. Are you looking at the 454 level?
454, 460, that's been an inflection point. It just happens to be this week, but I mean, you go back to really last fall as well, where we really kind of rolled over. Those are going to be some big levels to keep an eye on, and we're at an inflection point where we're pretty darn close to some break-even points for a lot of guys as well. So decisions need to be made, and I think you do get these rallies. You need to separate, between being a trader and being a hedger. If you're a hedger and need to protect downside risk, you're perpetually long. So you're already long the market. You need to be playing a little bit more on the defensive end, even if you still are bullish going into the spring. Yeah,
just rolling up put spreads. I mean, that's probably what you're doing, right? Or buying outright puts, right?
Yeah, the volatility is relatively low still in the grain market, so I think puts are a good play there. Kind of gives you a little bit of peace of mind. There's a floor underneath you and keeps that upside open.
How much do you think the U.S. dollar is having a play in this thing? It's 109-ish right now. That's pretty high. That's like a 25-week high when we hit 110.
I mean, when you zoom out and look at what corn's been able to do in the face of a strong U.S. dollar, I think it's pretty encouraging. And you could almost make the case that that could be a bullish tailwind if there is a mean reversion in the U.S. dollar. Potentially commodities get a nice little boost from that.
Very true. I mean, it's been interesting to see that fly in the face, as well as cattle. That's done the same thing. And there's been a lot of things that have kind of shook it off. And if it does finally come lower, like you said, I mean, that really could be something good. I don't know. I'm still in a wait and see mood about whether this rally is real in the ags. That was such a shocker on Friday. I need to see a little bit more before I go all in, but it'll be interesting. Absolutely a breather. Let's go to the lean hogs. That is lower too, but not by much. Rolling over just a little bit here. Feb's down 87 cents to 82.25. April, that's down 52 cents to 90.50. Let's bring back in Mr. Oliver Slope. He's been so patiently waiting in the wings in Chicago. It's probably a little bit chilly up there today. No, maybe a little respite. What do you got going on?
It's like the warmest day we've had all week. I think we're pushing 30, 32 degrees, so we're right on the brink of freezing. But that comes with the territory, I guess.
That's shorts weather.
Yeah, no kidding. But seeing some pressure in the livestock markets here in today's trade, especially in the cattle complex from this morning's open, really just kind of a washout. And I think a lot of that came on the back of some rumors that we were hearing. We still have not confirmed the rumors, but talk of the Mexico border kind of reopening on March 1st, and there's 200 to 300,000 head of cattle waiting to cross the border. Yeah. So I think that started circulating and put pressure on prices. The market has bounced back from those early morning lows, which is, I guess, encouraging if you're bullish the market. But again, I still think that risk of that headline really hitting is a sign that producers need to protect the downside a little bit from these levels, especially with funds, record net long feeders, and darn near record net long live cattle.
Speaking of live cattle, how much? We'll give you 10 seconds to answer. How close are we going to be to putting a 2 in front of this?
That seems to be a big psychological number. Cash market heating up again. I was hearing some sales in areas at 207 today.
Yeah, I heard 205 for sure, yeah.
Those futures are having a hard time getting out above there. Everyone that wants to be long is already long.
It's like cash is giving the futures permission, and it's not taking it. I appreciate you coming on, though. Great stuff as usual, Oliver. Oliver Slope, Blue Line Futures up in a balmy Chicago.